got $100,000 to invest. The real question is, where do you put it? Two of the biggest ETF contenders are SCHD and VTI, but they play very different games. One is built for dividends and passive income, while the other is a set-it-and-forget-it total market powerhouse. So, which one will actually make you more money? More importantly, which one aligns with your investment strategy? In this video, we'll break down the key differences between SCHD and VTI, their approaches to wealth building, and the risks involved. And at the end, we'll compare what happens if you invest $100,000 in each ETF over the long term. One of them has the potential to grow into over $4 million. Let's start by understanding what these ETFs are designed for. Both SCHD and VTI are ETFs, but their objectives couldn't be more different. SCHD is a dividend-focused ETF that prioritizes steady income, while VTI casts a wide net over the entire U.S. stock market, aiming for long-term capital appreciation. If your goal is consistent cash flow, SCHD is tailor-made for you. It invests in high-quality dividend stocks, companies with strong financials and a history of reliable payouts. On the other hand, VTI doesn't focus on dividends at all. Instead, it aims to own a piece of the entire U.S. economy, capturing everything from emerging startups to trillion-dollar giants. But how do these different strategies translate into actual returns? Let's break it down. SCHD's growth comes from both share price appreciation and dividend payouts. Its biggest advantage is the consistent income it provides. Every quarter, dividends land in your account, and if you reinvest them, you accelerate your compounding returns. VTI, on the other hand, follows a long-term growth approach. Since many of its holdings, especially in tech, reinvest their profits instead of paying dividends, VTI relies heavily on stock price appreciation. The benefit? Higher growth potential. The trade-off? Minimal cash flow along the way. For those who love seeing regular income, SCHD's steady payouts can feel more rewarding, even in downturns. But if you're thinking ultra-long-term and want to maximize total returns, VTI's broad exposure gives it an edge. To truly grasp the differences, we need to look at what's inside these ETFs. SCHD is built for dividend investors. It holds around 100 carefully selected stocks, primarily in financials, healthcare, and consumer staples. These industries tend to be resilient, as people always need banking services, medicine, and everyday goods. Think of companies like Pfizer, BlackRock, and Coca-Cola, brands that have been around for decades and aren't going anywhere. VTI, on the other hand, is an entirely different beast. It holds over 3,600 stocks, covering every industry and market segment. Nearly a third of its holdings are in tech giants like Apple, Microsoft, and Nvidia. This has been a blessing over the past decade, but also makes VTI more sensitive to market downturns. The fundamental trade-off is this. SCHD focuses on quality over quantity, while VTI spreads its bets across the entire market. The question is, do you want a list of reliable dividend payers or broad exposure to everything? Now let's talk about real numbers. Over the past year, SCHD delivered an 8.88% return, while VTI soared with 21.47%. This isn't surprising given how well tech stocks performed in 2024. But short-term returns don't tell the full story. Zooming out to a 5-year period, SCHD has grown by 45.74%, while VTI sits at 79.6%. Over the past decade, SCHD has provided a respectable 114.37% return, but VTI has skyrocketed by 178.77%. At first glance, VTI seems like the clear winner. However, these figures don't account for dividends, which is where SCHD shines. When you reinvest those payouts, SCHD's compounding power becomes a serious contender. Let's run the numbers for a $100,000 investment in each ETF over 30 years. 1.24% dividend yield, 6.99% dividend growth rate, 10.88% average annual price appreciation. After 30 years, total portfolio value, $2,749,400. Annual dividends after 30 years, 11,953. 3.539% dividend yield. 11.4% dividend growth rate. 7.69% average annual price appreciation. After 30 years, total portfolio value, $4,133,336. Annual dividends after 30 years, $375,900. While VTI's value appreciation is impressive, SCHD's combination of stock growth and high dividend payouts creates nearly $2 million more in total wealth. Plus, the passive income from dividends alone exceeds $31,000 per month, enough to retire comfortably without selling shares. So, what's the verdict? If you're looking for pure long-term growth, VTI is a solid choice. But if you want to build wealth and secure massive passive income, SCHD is the clear winner.